Have you ever wondered why currency pairs with the USD are the easiest to trade? Well, you're not alone. The Forex market is a bustling hub of activity, a dynamic and lucrative ecosystem where the US dollar, or USD, plays a starring role. It's no secret that in this vast financial arena, where daily trading volumes exceed $6 trillion, currency pairs involving the USD are in a league of their own. The prominence of the USD in the Forex market is indisputable, making USD pairs a hot topic for traders around the globe. But what's the secret sauce that makes these pairs so easy to trade? Is it the high liquidity, the market depth, or perhaps the abundance of readily available information? In this video, we're setting out on a journey to answer these questions and more. We'll explore the ins and outs of trading USD pairs, shedding light on the unique factors that contribute to their popularity and ease of trading. We'll also touch on the importance of proper risk management and analysis in Forex trading. In this video, we will delve into the reasons why USD pairs are considered the easiest to trade. So, stay tuned. First off, let's talk about liquidity, a crucial aspect of any financial market. When we say a market is liquid, we mean it's bustling with activity, filled with traders buying and selling. Now imagine this, but on a massive scale. That's the USD pairs for you. In the world of Forex trading, USD pairs are like the life of the party. They have high liquidity, meaning there are always plenty of people ready to trade. This high liquidity is a trader's dream. Why, you ask? Well, it allows traders to quickly enter and exit positions without slippage. Slippage, in case you're wondering, is when the price changes between the time you decide to make a trade and when your trade is executed. It's like trying to catch a train that's already left the station, but with high liquidity, that train waits for you. Let's not forget that high liquidity also plays a key role in reducing trading risks. It's like having a safety net. If a market is highly liquid, it can absorb large trades without significantly impacting the price. This means you can get in and out of the market without causing big waves. So, the high liquidity of USD pairs is a major reason why they are easy to trade. Next up, we have market depth and transaction costs. Now let's dive in and understand why the USD pairs shine in these areas. Market depth refers to the volume of orders at different prices. The USD pairs typically have a higher market depth, which means there are more buyers and sellers at different price levels. This higher market depth leads to tighter bid-ask spreads. What does that mean? Simply put, tighter bid-ask spreads equate to lower transaction costs for you, the trader. Now let's think about this. If you're trading frequently, even a small reduction in transaction costs can lead to significant savings over time. This is particularly important in Forex trading, where margins can be thin and every penny counts. So the higher market depth and lower transaction costs not only reduce your trading costs, but also increase the predictability of your trades. This makes trading USD pairs a more efficient and cost-effective choice. The higher market depth and lower transaction costs of USD pairs certainly make them an attractive option for traders. Information is power, especially in Forex trading. When it comes to currency pairs with the US dollar, you're never left in the dark. Thanks to the transparent and efficient US financial system, there's a wealth of information at your fingertips. Economic indicators, policy changes, market trends, you name it, it's readily available. This abundance of information helps traders make informed decisions, anticipate market movements, and manage risks more effectively. But there's more to the story. The stability of the US economy is another significant factor that makes USD pairs easier to trade. It's no secret that the US economy, one of the largest and most robust in the world, is a beacon of stability. This stability translates to less volatility in USD pairs, making them more predictable and less risky to trade. So whether you're looking at the dollar against the euro, the yen, or the pound, you're dealing with a currency that's anchored in a strong and steady economy. With abundant information and a stable economy, USD pairs indeed offer an easier trading experience. To wrap things up, let's summarize the main points. We delved into the world of Forex trading, specifically focusing on currency pairs involving the US dollar. We found that these pairs are considered the easiest to trade due to a few key factors. Firstly, they boast high liquidity, which allows traders to swiftly enter and exit positions without slippage. Secondly, the market depth of USD pairs is typically higher, which results in tighter bid-ask spreads and consequently lower transaction costs. We also discovered the abundance of information available for USD pairs, thanks to the transparent and efficient US financial system. This wealth of data is a boon for traders. Furthermore, the stability of the US economy adds another layer of appeal to these currency pairs. However, let's not forget that trading, while potentially lucrative, involves risks. Proper risk management and thorough analysis are vital to success in this dynamic market. So there you have it, the reasons why currency pairs with the USD are the easiest to trade. Happy trading.